Welcome to our new IFRS Additional Fund Service. It is an initiative of OJ Administration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards, IFRS, through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions of set 1 to which the answers will be provided on IAS 40. This is the standard on investment property. Viewers or subscribers have 30 seconds to select or choose the answer to each question. The answers to the 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 1. Owner-occupied property is reported using dash. A. IAS 16. B. IFRS 16. C. IAS 40. D. IAS 2. E. IFRS 15. Time counts. Ten seconds gone. $20 seconds gone. Time up. Question number 2. Which of the following is not attributable to investment property? A. It is held to earn rentals. B. It is held for capital appreciation. C. It is held to earn rentals and capital appreciation. D. It is held for use for administrative purposes. E. None of the above. Time counts. Ten seconds gone. $20 seconds gone. Time up. Question number 3. Investment property can be measured using dash. A. Revaluation model or fair value model. B. Cost model or revaluation model. C. Fair value model or cost model. D. Cost model or net realizable value model. E. Cost model or fair value less cost of disposal model. Time counts. $10 seconds gone. $20 seconds gone. Time up. Question number 4. Where the fair value of an investment property is more than its current amount, the difference is dash. A. Recognized in other comprehensive income. B. Recognized in profit or loss. C. Not recognized in line with prudence. D. Recognized directly in retained earnings. E. Net of decrease arising on owner-occupied property. Time counts. $10 seconds gone. $20 seconds gone. Time up. Question number 5. Where a fair value loss arises on investment property on which fair value gain had been previously recognized, the fair value loss is dash. A. Deducted directly from retained earnings. B. Deducted directly from fair value reserve. C. Recognized as a fair value loss in other comprehensive income. D. Recognized in profit or loss. E. Disclosed only as a note to the financial statements. That counts. $10 seconds gone. $20 seconds gone. Time up. Question number 6. After initial recognition, investment property measure using a cost model applies which standard for the model? A. IAS 2, B. IAS 16, C. IAS 40, D. IFRS 5, E. IAS 1. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 7. For an investment property carried at fair value, which is subsequently transferred to owner-occupied property or inventories, what becomes the deemed cost for the date of the transfer? A. Historical cost less accumulated depreciation. B. Historical cost less accumulated depreciation and accumulated impairment. C. Fair value at the date of change in use. D. The first fair valuation made less accumulated depreciation. E. The first fair valuation made less accumulated depreciation and accumulated impairments. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 8. Where an unoccupied property having the revaluation surplus is transferred to investment property carried at fair value. Any excess of the fair value at that date above the current amount is dash. A. Used to increase the valuation surplus reserve. B. Recognized in profit or loss. C. Recognized directly in retained earnings. D. Recognized directly in total equity. E. Ignored at the beginning of a new asset reporting. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 9. For inventory transferred to investment property carried at fair value, the difference between the fair value at that date and the previous current amount is recognized in dash. A. Other comprehensive income. B. Profit or loss. C. Retained earnings directly. D. The balance of inventory not transferred. E. Fair value reserve. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 10. Where an entity completes the development of a self-constructed investment property at fair value, any difference between the fair value at that date and its previous current amount is dash. A. Used to reduce construction work in progress. B. Used to reduce the value on the building engineer certificate. C. Ignored until the investment property is realized. D. Recognized in profit or loss. E. Recognized in other comprehensive income. Time counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to review the answers. Question number 1. The answer to question number 1 is A, IAS 16. Owner-occupied property is property held for use in the production or supply of goods or services or for administrative purposes. IAS 16 applies to owner-occupied property. A is the answer to question number 1. Question number 2. The answer to question number 2 is D. It is held for use for administrative purposes. Investment property is property, whether land or building, or both of them, or part of a building, held to earn rentals or for capital appreciation, or both, rather than for A, use in the production or supply of goods or services, or for administrative purposes, or B, sale in the ordinary course of business. D is the answer to question number 2. Question number 3. The answer to question number 3 is C, fair value model or cost model. IAS 40 provides that investment property is measured either using the fair value model or the cost model. C is the answer to question number 3. Question number 4. The answer to question number 4 is B, recognizing profit or loss. A gain arising from a change in the fair value of investment property is recognized in profit or loss for the period in which it arises. B is the answer to question number 4. Question number 5. The answer to question number 5 is D, recognizing profit or loss. A loss arising from a change in the fair value of investment property is recognized in profit or loss for the period in which it arises. D is the answer to question number 5. Question number 6. The answer to question number 6 is B, IAS 16. An entity that chooses the cost model to measure its investment properties applies IAS 16 requirements for the cost model. The cost model accounting policy election allowed in IAS 40 is that of IAS 16, property, plant, and equipment. B is the answer to question number 6. Question number 7. The answer to question number 7 is C, fair value at the date of change in use. The deemed cost of investment property carried at fair value that is transferred to unoccupied property or inventories is the fair value at the date of change in use. This serves as the opening balance for reporting in line with IAS 16 property, plant, and equipment, or IAS 2 inventories. C is the answer to question number 7. Question number 8. The answer to question number 8 is A, used to increase the valuation surplus reserve. At the date of transfer of an owner-occupied property to investment property carried at fair value, any resulting increase as a result of the fair value over the carrying amount is treated as follows. 1. To the extent that the increase reverses a previous impairment loss for that property, the increase is recognized in profit or loss at no more than that extent. 2. Any remaining part of the increase is recognized in other comprehensive income and increases the revaluation surplus within equity. As the revaluation surplus already exists for this property, it evidences no previous impairment loss or revaluation loss that needs to be reversed through the recognition of fair value increase in profit or loss. Therefore, the increase in the question is recognized in other comprehensive income and increases revaluation surplus reserve. A is the answer to question number 8. Question number 9. The answer to question number 9 is B, profit or loss. For a transfer from inventories to investment property that will be carried at fair value, any difference between the fair value of the property at that date and its previous carrying amount is recognized in profit or loss. B is the answer to question number 9. Question number 10. The answer to question number 10 is D, recognized in profit or loss. When an entity completes the construction or development of a self-constructed investment property that will be carried at fair value, any difference between the fair value of the property at that date and its previous carrying amount is recognized in profit or loss. D is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IAS 40 investment property. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Inspiration Limited. Thank you once again and bye for now.